First BlackRock and now Fidelity are applying for a spot Bitcoin ETF. Why are the most boring firms in finance entering the Bitcoin market now? And what does this mean for Binance and the other centralized exchanges? Well, for Binance, it seems to mean a global coordinated campaign to destroy them. Last week we had news that authorities in France were investigating them, we had regulators in the Netherlands refusing them a license, and now Binance themselves have decided to pull out of Cyprus and the UK markets. All this on top of the ongoing SEC regulatory action in the States. There are multiple reasons behind these multiple issues that Binance are facing, but it feels extremely coincidental that it started a few days before the news broke that BlackRock and Fidelity are filing applications to offer spot ETFs. If you want a more detailed breakdown of what a spot ETF is, check out our last video. The whole reason for offering a spot ETF is to simplify and make a uniform entry point to crypto for investors. If that was your stated aim, then it would also stand to reason that you would look to reduce the complication and competitions in the market, and the thousands of altcoins and the exchanges that offer them would be those complications and competitions. This might all seem a bit conspiratorial, but it is weird how it ties in with SEC talking points like this from last week.
Look, we don't need more digital currency. We already have digital currency.
I think a good indicator of just how clearly there is a FUD campaign ongoing is this story about Binance UK's headquarters being in a tiny office, as if this is somehow evidence of them being fraudulent or a major problem. Almost all major companies, including some of the biggest on earth like Coca-Cola and Apple, have shell offices in places like Delaware, especially for satellite offices where all your staff work from home in regions where you're not majorly based. The journalists writing this story will know that, but they also know that it's reputationally damaging to Binance, which is actually the point. Whether it's opportunism by BlackRock and Fidelity or a coordinated attack, the upshot is that we're likely to see a reshaping of the market. Last week we ran through some of the benefits of the BlackRock ETF, and these will hold even more true now that Fidelity are in the mix. We're going to have increased accessibility for major capital. We're going to get the institutional credibility. If these firms are interested in Bitcoin, there really is something there, and it massively speeds up mainstream adoption. We're going to have huge increases in liquidity, which allows price stability and makes trading easier. And we're going to have major breakthroughs in the regulatory compliance. We're not going to see the SEC randomly attacking these firms. At least they're not going to attack Bitcoin. I think that some of the other alts are going to suffer majorly because of this, though. As well as the issues for alts, there are the obvious major issues around Fidelity and BlackRock moving in this way. We could potentially lose one of the key things that makes crypto special, the lack of barriers to entry and its democratized nature. Currently, anybody anywhere in the world can sign up to an exchange and buy Bitcoin. That may no longer be possible, or certainly may become more difficult. Also, there's a huge issue around points of control. What we don't want to have is a market that is centralized with huge holders completely controlling the price of Bitcoin. People will argue that that's the situation that we have now, but I think it'll get worse if the companies that are in charge and have that central point of control are also incredibly politically active, as BlackRock and Fidelity are. The moving of the SEC over the past week may indicate why this is a problem. The spot ETF also removes one of the primary functions of BTC, which is self-custody and actual ownership of your own assets, rather than having them held for you and by some trusted custodian. I think on the charts we're starting to see the effects of what's happening in the market. Zoomed out on the daily, we can see that we're in this very large broadening wedge formation, and that's been developing since the turn of the year. We can see this formed back on the 1st of January. After peaking at 30k, prices corrected all the way down to the lower trend line. We actually had this drawn out as a couple of formations. Firstly, we sort of saw it as a falling wedge, but I think more recently we've fallen into this bull flag formation. We can see that price is now broken out of that formation, having touched the lower trend line, and we're also breaking above this area of previous support and resistance. If price can hold here, then I think we'll likely bounce up and test this resistance at 28.2. However, we do have highlighted here by the block party indicator a potential pullback. If that's the case, then we'll test the bottom of the support, which lines up with the weekly moving averages, and then likely the lower trend line again, somewhere around 25.5. If we do see institutional purchases picking up on the back of the BlackRock and Fidelity news, and we manage to close above this resistance here, then I think we might really be off to the races in terms of price rises, as we have very little in the way of resistance above here. If we kind of have a look at where we probably intercept this upper trend line, you can see it's probably going to be in the mid 30s by the time that we see this trend line resistance again. The flip side of this bullish outlook for Bitcoin, however, is that alts are going to likely struggle. This is the Bitcoin dominance chart, and we can see that we're over 50% for the first time since way back in May 2021. I think what this is telling us is that whilst there's money coming into the market, all that money is going into Bitcoin, and money that is already within the market, i.e. money that's within alt projects, is moving from those projects to Bitcoin. Join the Discord to stay fully up to date and get our actually defined trade signals, and let us know your thoughts down in the comments. Thanks, bye.